Everybody is talking about the DeepSeek bombshell that just hit the stock market.
The emergence of DeepSeek now putting pressure on the U.S. tech names.
DeepSeek spooked investors in a big way.
High flyer NVIDIA alone lost $600 billion in one day, the largest market cap loss in the history of the stock market. So this begs the question, is DeepSeek potentially the next stock market black swan? I'm going to reveal the answer to you in 3 simple, fast steps. Step number 1, let's go over how the NASDAQ got completely crushed. And as an example, the poster child for the high-flying Mag 7, NVIDIA. So we go all the way back, well, not that far back, to the beginning of the year. And on the left, we go from 120 up to 150. Well, NVIDIA is humming right along here. Everything is good. AI is the future. Well, it's a little overbought. Okay, that's fine. But we're going to go ahead and buy the dip, and it goes up, up, up to 148. Then all of a sudden, we get the news about this new AI product that is completely disrupting the space. That would be DeepSeek. So what actually happened? What is it? Well, it's an AI tool that doesn't really need much hardware, or needs a lot less. Needs a lot less data centers and a heck of a lot less energy. And they built it for not 6 billion, but 6 million. So what this does is throws a huge curveball, to put it mildly, into the business model of NVIDIA and some of these high-flying tech stocks that make up the majority of the S&P 500, and therefore the majority of not just U.S. investors' portfolio, but global investors' portfolio. More on that in step number 2. But then we get to this Wile E. Coyote moment where NVIDIA goes from 148 all the way down to 118. Like we said, a loss of market cap, $600 billion, the largest market cap loss in the history of the stock market. To give you some context, just in one day, NVIDIA lost more than an Exxon. It lost almost as much as a Home Depot and a Toyota combined in one day. But that's not all. Let's go through some of the other stocks that got absolutely crushed because of this potential disruption in the AI space. We've got the NASDAQ overall down about 3%, Broadcom down 17, AMD down 6, Microsoft 2, Palantir 4, Constellation Energy down 21%, Vistra, another energy company, down 28%. Why an energy company? I thought this was disrupting AI. Right, but think about all of the data centers, hardware, and energy that went, or we thought was going to go into the AI revolution. But now if those energy needs have been cut in half, let's just assume for the sake of this example, then these energy companies that were tied to the AI revolution and trading at a 40 times PE, that PE is going to go down. Why? Because the expected earnings plummet. And if the expected earnings plummet, then you have to adjust the price. Now, overall, there was about $1 trillion of market cap that was lost in just one day. I want to be very clear. We'll have to see how this plays out. Maybe it could be a buy the dip opportunity. I don't know, because I don't really know the AI space. But what I do understand is macroeconomics and how this plays into the overall economy and some potential problems that may arise. That's what this video is all about. But again, there are no certainties, there are only probabilities. But if we assume that this takes us into, let's just say, another bear market, not a stock market crash or anything like that, but let's say over the next 6 months or so, the stock market goes down by 20%, 25%. something we have seen numerous times in the past with the S&P 500, using that as a proxy. Okay, well, let's think about what that does to the overall purchasing power, because this is the key. Let me explain. In a healthy economy, you've got the economy leading the stock market or asset prices. So I always use the visual of a hot air balloon. So the economy should be the balloon, and the basket that goes wherever the economy goes should be asset prices, including stocks and including real estate as well. But that's a topic for a separate video. But unfortunately now, the United States has the inverse of a healthy economy. Now the balloon that leads everything is pretty much asset prices, and the basket is the actual economy. So if the balloon starts to go straight down because DeepSeek pops a hole in it, then you would expect the economy to go down with it. That's why this isn't just an AI story. It could potentially be a macroeconomic story, hence a true black swan. Step number 2. Now let's go over why the market is so fragile to begin with, why there's so much systemic risk that makes this like the Jenga puzzle we saw in the movie The Big Short. You take out one too many pieces and the whole thing comes crashing down. I want to go over to a chart that my good buddy Chris McIntosh gave me. I want to give him a big hat tip there. And this illustrates the insanity we have been dealing with over the last few years. And by the way, it keeps getting more and more insane, which means more and more fragile, more and more risky. As if you didn't already know, by the simple fact that Fartcoin right now has a $2 billion market cap. If that doesn't show you the hysteria and the mania in markets right now, I don't know what does. But this chart gives you another visual representation. NVIDIA, and keep in mind, this was before the crash the other day. NVIDIA's market cap was at 3.5 trillion. You say, George, so what? Who cares? And by the way, that's represented by this blue shaded area with the white line. But look at this green line. The market cap here is, call it 2.9 trillion. So 3.5 trillion for NVIDIA and 2.9 trillion for this other stock. But that green line doesn't represent just a stock. It represents the entire global energy sector. That's right, the same energy that NVIDIA needs to run its processors and the same energy that the AI revolution needs, regardless of what form it takes, whether that's with the NVIDIA model or the DeepSeek model, more geared towards software. Regardless, we have to have energy to do anything. And the fact that one AI stock had a $3.5 trillion value when the entire energy sector that we need for everything in the economy, we need it to exist as human beings, had a 2.9 trillion valuation, tells you how extreme things have gotten. But I want to be very clear, this isn't just a US-centric story. This impacts balance sheets all over the world. As an example, let's look at US equities and their share of global stock markets. So the United States represents maybe what, 4 or 5% of the total population, but our stock market has 67% of the entire market cap. So we can't say that, well, this just impacts American investors, because obviously with the United States equity markets taking up a 67% share, this is going to impact balance sheets all over the world. And an example of how this plays out, we can just go to the dot-com bust, and we see that the United States went into a balance sheet recession, but many other countries did as well. It wasn't because they had economic issues. It's just that those balance sheets in the other countries took such a massive hit from the dot-com bust
that it impacted aggregate demand, and therefore it did throw the economy into a contraction. So my point is, if we saw that happen during 2021, it's definitely possible, although it's not a certainty, it's a possibility that we see that happen again in 2025. But it's not just the fact that the United States equity markets represent 67% of global equity markets. It's the concentration within the S&P 500. Let's go to visual capitalists. And we can see that in 2014, the Mag 7 was combined 10% of the S&P 500. We fast forward to 2024 and we're at almost 35%. So it's not just the fact global balance sheets to a certain degree are dependent on US equities. We have to take it a step further. They're actually dependent on just the S&P 500. But then you have to take another step further and realize they're dependent on just 7 companies within the S&P 500, the Mag 7, which could have just taken a big hit due to what DeepSeek revealed about the AI revolution. Now, this doesn't mean that we're going to have a stock market crash or even a bear market. There are no certainties, only probabilities. But we have to realize that this level of concentration is completely unprecedented. Therefore, the level of risk is also unprecedented. And we could have just seen a pin called DeepSeek pop this concentration Mag 7 bubble. So the main takeaway is this isn't something to lose sleep over, but it's definitely something you don't want to ignore. The last time I checked, burying your head in the sand like an ostrich is a very poor investment strategy.
Step number 3. Now let's go over the passive investing time bomb and see how this plays in to everything that we've discussed so far on this video. We start with this guy right here. Now, he represents the discretionary investor, and everyone's got a fancy NFL name these days. So his name is Bob, but we're going to call him D-Bob. That's right, sounds pretty nifty. So D-Bob, the discretionary Bob investor, back in the good old days, had assets under management, or they managed capital. Okay, and D-Bob is a really smart guy. He looks for value and he looks for things that are underpriced, and that's why he's got his fancy calculator right there. Okay, well, compare him to his counterpart, and that would be the passive investment vehicle. We're going to call him N-Blob because he's kind of a big fat guy. He really doesn't make any decisions because he is non-discretionary. So Bob really has to think, but Blob doesn't have to do anything except collect money and drink his bottle of whiskey. He doesn't need a calculator. No way. In fact, he makes so much money that he can afford a very, very fancy, almost as fancy as Bob's calculator, gold chain right there. And obviously he's wasted from the whiskey. That's why his eyes are just X's. You can't even see them. But he really doesn't have to do anything because Joe, let's say he has some money saved up. So he's going to give his money to Blob, and all Blob has to do is buy the S&P 500, or in this case, let's just use the Mag 7 as an example. He doesn't have to think. That's the point. Where the money that goes to D-Bob, well, he actually has to make decisions above and beyond a dollar comes in and I buy $1 of XYZ. So why does this matter at the end of the day? Well, let's just assume that to begin with, N-Blob had $100 of money to allocate and D-Bob had $100. Okay, fine. And let's assume that the average Joe looks around and he says, well, I don't know, it's a little risky out there with this DeepSeek and everything. So I'm going to go ahead and take my money out of this fund and I'm going to buy treasuries, or maybe I'm going to buy gold or some Bitcoin, something like that. So Blob has to sell the Mag 7. He has no choice. So what happens to the price? It goes down, just like the price went up right here when he was indiscriminately buying $1 in, and you buy $1 of Mag 7. Now, fortunately, D-Bob has $100, and he's going to see the price of these stocks go down, and at a certain point, he's going to step in, and what's he going to do? He's going to buy. So this actually stabilizes the price at a fair market value based on sanity and based on fundamentals instead of just hype and mania. But you see, D-Bob could do that because he had $100. The problem now is all the capital has gone into passive investment vehicles. So instead of having $100 over here and $100 over here, now we have $199 over here and $1. So what happens if Blob has to sell, let's just say $100 of the Mag 7 because the average Joe wants to take his money out to buy treasuries, gold, or Bitcoin? All of a sudden, there is no buyer because there's not enough capital that's being managed by the discretionary investor. That means the price of these Mag 7 stocks, as an example, would continue to go down and down and down and down until they got to some point where the average Joe was actually incentivized to sell his treasuries, gold, or Bitcoin to buy these stocks that had just gotten crushed. So why does this matter for the economy? Well, let's go back to the market structure we were talking about in step number 2. So here is the Jenga puzzle that everyone is familiar with. And at the top, we have the global economy. And remember, a lot of those balance sheets in the global economy have exposure to U.S. equities. And of course, we've got the U.S. economy. If you don't think the U.S. economy would be impacted by the S&P 500 or the stock market, just ask yourself what would happen if the stock market went down by 50% over the next month. Do you think we would go into a recession? Of course we would, especially when you look at it through the lens of those balloons we were talking about in step number 1. But then the next level of the Jenga puzzle would be the S&P 500, but the step further that we talked about in step number 2 is the Mag 7. So right here, you got this guy with a shifty little grin on his face. This is the DeepSeek guy. And the DeepSeek guy is sitting there with a stick, and he's poking at this bottom Jenga piece, which of course is the Mag 7. And if, and that's a big if, I don't know, we're just going over the possibilities in this video, but if the DeepSeek kid can go ahead and poke that bottom Jenga piece out with his stick, what happens to the entire Jenga puzzle? What happens to the US economy? What happens to the global economy? Now, I want to be clear, this isn't a prediction. I'm not saying this is going to happen. I'm saying this is a possibility we all need to be aware of. So is DeepSeek the next black swan? I don't know. That's for you to decide. And at the end of the day, there are no certainties. There are only probabilities. For more content that'll help you build wealth and thrive in a world of out-of-control central banks and big governments, check out this playlist right here, and I will see you on the next video.